Let's take stock then of what's going on when it comes to the entire cold chain express and what the view is on growth strategy for these logistics companies. We're connecting then with the management of TCI Express. We've got Chander Agarwal, he's the managing director, now joining in. Good morning, Mr. Agarwal, and thanks for taking time out. Let's begin with financials then. And your FY21 quarterly EBITDA was the highest ever. So how have you managed to grow your numbers, and how has COVID impacted the overall business, your volumes, the overall logistics activity?
Morning. Q4 actually was a result of several measures that we had taken. One of that was the better capacity utilization, higher pricing, and third, I think overall the volumes had picked up, the demand had picked up. So those were the main reasons, and I think yes. I didn't get your second part of the question.
Asking the impact of COVID on logistics activity, on volumes, and what led to this strong EBITDA performance.
Right. So those three reasons were the main impetus for the growth in Q4. But I think now it's like, the lockdowns have really affected the way demand has grown in the past few months. And I think Q1 will obviously not be a washout like last year, but it'll definitely be better than last year.
Okay, fair enough. Now, what about your SME customers? Because your Q4 volumes have been driven by the SME customers. So how much of a percentage of your total volumes comes from there? And, are cash flows looking encouraging within this space?
Oh, yes. SMEs were actually the first to bounce back, like after a lockdown. And typically this is the case. The pricing is much better than the larger customers. And the bounce back has been quite strong. The volumes have been much higher compared to any of the larger clients. And I think going forward, this would remain the same. I mean, I don't think there's going to be any change happening. They're well funded. They have a very good financial support from the government. So I think they will throughout the year, they will manage to be a substantial part of our revenue.
Chander, as I understand, when it comes to your strategy and priority over the next 5 years, you've said that you're going to more than double your revenues, and new value-added services are expected to contribute 25% to your top line. How is it that you plan to achieve this particular target? And has the COVID second wave or a possible third wave, who knows, going to derail this target for you?
So, the logistics industry grows on the backbone of the economy. And however the economy is growing is how we grow, and the logistics companies, that is. But in Express, we grew double the growth of the economy. So, for example, if the economy is growing 10%, then the Express trucking industry grows at about 22%. So I think keeping that in mind and looking at the speculated growth levels for India this year, which has been, I think, capped at 8 or 9%, I think we should be able to see about 16 to 18% growth. COVID, yes, Q1 has been affected. And of course, we don't know, like you mentioned, that there could be a third wave, but as you know, the government agencies and everyone is saying that the third wave will not be as severe as the second wave. So I think we will be not in such a bad position. And interestingly, the demand has picked up. It has come up to about 85% of March levels. So I think going forward, even if there is a third wave, we would see that the demand remains at about, we could see that the demand remains at about 95%, which would be all right.
Sure. So you have a high ROC, Chander, of about almost 34%. Can it be maintained? And also wanted to understand what's your target dividend payout, given that you paid about 4 rupees dividend in FY21 with a 200% payout?
So I think the ROC can be well maintained. We have a very robust capex plan, and of course, all that is through internal accruals. We are the only logistics company which is debt free, and so that would be maintained. And similarly, with the dividend payout, we would be giving out at the same ratio. I don't see any change happening for this year at least.
Mr. Agarwal, just to kind of look at some of the other, pockets as well. You've closed the year with, the highest ever quarterly EBITDA. Margin improvement also was driven both by volumes, realizations, and you guided that it would improve as well, 100 basis points, and it's targeting a 20% EBITDA margin by FY23. What are the key drivers that are leading to this kind of growth?
Volume growth will obviously be one of the number one factor that happens that fuels this growth, and number two would be better capacity utilization. And now we have two new sorting centers which have come up, and one of them is about to start in Gurgaon hopefully by September. And then when the automation kicks in these centers, then we will see even more better capacity utilization. So the capacity that we're seeing right now is already not to the full level of our network because of low demand. But when this starts and the demand kicks in, the efficiencies are going to be very high, and that definitely would give us the margin guidance that I have given, or in fact, it could be even more. So, and that's a matter of time we'll get to know. So I think we are well prepared for the kind of growth or the numbers that we have given out. We should be able to achieve that. Should not be so much of an issue.
Sure. Okay, so driven by growth there and volumes expected to also see a substantial uptick. How do you see fuel prices and the way they're increasing impacting margins going forward? If crude rises, let's say to the 80 to 100 mark, as some reports suggest, what do you see the likely implication of that?
So I think that is a big worry for us and for all logistics companies. The high fuel prices is something that the unorganized segment first falters the most underneath that pressure. And in the express trucking, we have like a passover, a rollover to the customer, but of course that is not fully 100%. So it's again something that has to be managed periodically, and the way we are talking to our clients and making them understand that will make the ultimate difference.
Now, given that the Indian logistics market is dominated by, by road, nearly 60%, rail is about 31%, and a very small percentage by water, how do you see the mix changing for the industry level over the next 5 years? Do you think that we will see the share of rail expanding gradually?
It's very interesting. I don't think that's going to happen because, India is a very cost conscious country. Customers don't want to pay so much for the rail or any logistics service which is unsure and is also expensive. So rail service is still on that side expensive compared to road. It's not able to maintain the schedules as per, like, say, a road express logistics company. And of course, our the railway system that we have is mostly passenger driven. It's not freight driven. So that will always be a challenge. And to shift the road material on rail on the behest that it's possible, using the passenger trains, is going to be very difficult. And of course, the government also realizes that, and they're trying to find options as to how it can be done. But two main reasons: the high cost and the unsurety of the service of the railway, the trains. That will always be a hindrance to the shift from road to rail.
Okay, fair enough. And can you just talk to us a little bit about, the announcement that the company made? This is into the cold chain and C2C Express. How is that going to contribute? How big an opportunity is that to your overall financials? And can we see some more announcements on this front?
Cold chain is going to be a not really a large business volume for us. It is going to be part of the pharmaceutical vertical that we already have. So the pharmaceutical vertical clients, they require cold chain also. So it'll just be piggybacking off that. And with that, sense is going to be completely asset light. It's not going to be, it's going to be express. So it's going to be time definite. And our focus is going to be on pharma. So that is something will not contribute very large to our top line. So I think in the next 5 years, we'll keep it at about 2 or 3%. C2C, again, is something which, I feel can become about 5% in the next 5 years. So looking at that, I think we also have to have a very controlled rate of growth. We can't be just top line savvy and and falter on the bottom line. So with that notion, I think 5% on C2C would be a good go. Would be a good place to be at.
And there has been a lot of focus on tech advancement and automation to enhance operational efficiencies. What is the kind of investment that the company has made in upping your technology, the kind of cost efficiencies that you see on the back of this? And going forward, I'm sure there will be a lot more thrust and focus on tech advancement.
Absolutely. This year will be the year mark, for the major automation and technology upgradation that we're going to be doing in the history of Indian logistics. We'll be spending close to about 50 crores in the automation and technology upgradation alone. And I think in the next tranche of the investment that we have planned for 5 years, about 500 crores, again, I would say that 50% would be on automation and technology advancement. So I think the results will show, and we're quite confident that it will be a game changer for the company.
So definitely, some exciting things to watch out for there, Chandan. Let me just also get, a couple of more details from you, since we've got you in conversation today. If you just take a look at it from an industry perspective as well, what are the just key challenges that you foresee in the near term? I mean, if we just step back and take a slightly broader view for a moment, as an industry leader, what would be some of the key challenges in the near term?
So I think number one, obviously, would be the fuel, prices. That's going to impact demand throughout. So that has to be controlled in a big way, or there has to be like solutions coming out. The bureaucracy has to be removed from the fuel pricing system that we have. And apparently now we are the highest we are the country with the highest fuel price in the world. So economic growth could hamper because of that. That's one. Number two is the way the labor system is evolving in the country. That needs to be modernized. Otherwise, automation will take over, and it will, be which will, be in the short term and the long term, beneficial for logistics companies, but really bad for that society which depends on logistics for income. And thirdly, of course, is the infrastructure, which has greatly improved. But within the cities where we have the manufacturing units and all of that, that needs to be really worked out as to how it can be situated outside the cities to avoid, congestion and smooth flow of traffic. So I think these three main issues will always be something of highlight in logistics industry in India especially, and they need to be looked at very carefully and as early as possible.
Okay, fair enough. And if we take a look at the broader picture and market share, let's say 5 years down the line, what would be the outlook there?
I think the market it would depend a lot on the size of the economy, and if 5 years down the line, if we are seeing that the economy will be a $5 trillion economy or a $6 trillion economy, and logistics costs will be 15% of that, the market is going to be very large for logistics. And although we are seeing that it's a large market size, but the unorganized segment also has to be kind of like curtailed by the government, and that is something which they are trying to bring about by the GST implementation. So when the GST implementation or the GST 2.0 comes out, I think that will be a good time to really understand and talk about the market size.
Chander, thanks very much for sharing with us your outlook and giving us a view as to how business is shaped.